Hello guys. As usual, I will try to continue to speak about some stocks like Twitter, and just 1 week or two, I have spoken about Twitter. I was in a trade, I have a gap up, and I sold my shares, and I take my money from the market. Now, this technique I use, it's just a technique that I use for many years, and it doesn't mean I don't trust the market. It might go up and I will make more money, but it's just because of my experience. When I get a gap up, I sell my shares. I always do, and I'm always happy with that. But this time, as you can see, Twitter, after the gap up, after a few days, it has a gap down. Now, and then after 1 day or two, it has another gap down. And still, this stock is still continuing going down. Now, my opinion about this kind of stocks is that if you are scared to trade this kind of stocks, Twitter or Facebook or Google or Apple, understand that these stocks are volatile and it responds well with the news. Although the company has nothing. The company is doing what it's doing, it is earning money, and nothing happened to the company. But the news, some big guys, either they can sell or they can short the stock. Understand that these guys, they are not small traders. It's not $1 million or $2 million or $5 million that you have or someone has will make Facebook go down. Okay, no. It could be billions of dollars in order that you can move this stock. That's why these kind of stocks are big. Okay? And what makes this stock move is big hands in the market. Let's say a mutual fund has billions of dollars in Facebook. And then he decides to just sell half of what he has, and in 1 day or in a few days you will see that in the market. But understand that they will never tell you, because the people, they are naive in the market. They think that when you go to the what we call the market data or the information is in the stock itself, in the price. It's over. When they give you the news, it's over. For example, when the company announces anything, good or bad, when they announce, at that time, seconds, you will see the result on the price. It's so quick. There are some people who can get the information before the public. Okay? And even if they get it with the public, they act quicker. For example, when they send millions of shares to buy, before you open your account, it's over. Okay? The price has already gone up. In 1 minute or two, everything is done. So if you are following news, you should be a day trader, and you should follow the news and follow stocks that can respond well to the news, either up or down, and you do or whatever you want to do, and you should be glued to your screen. Now, as you can see, for Twitter, we have a gap up. 1 week or two, we have a gap down, and then 2 days we have another gap down, and then the stock will still going down. Okay, a lot of news come to this stock. It should be bad news. That's why we have two gap down. It might that also that some mutual fund they sell, okay, they don't want to stay more, and short selling is always there, okay. So if you don't feel well with this kind of stocks, my opinion, as always I give you my opinion, is just stay away from this kind of stocks if you don't like them, or if you think that you can lose a lot of money, because with two gap downs, some people, if they are there, if they have shares and they have two gap downs, they will lose a lot of money, okay. They will lose a lot of money, and this, if you have small account, it will be wiped out if you continue having like this kind of stocks. So that's why some other people try to see some stocks that they are not volatile. It means they just move a little bit, and you can see on the chart they are not going anywhere. And at least if you lose some money, you don't lose that much, and it's better than to lose too much money, because your trading account works with how much risk you want in the market. If you go to some stocks that are very volatile, it responds well to the news, understand that you are risking too much money in the market, and if you lose, it's your choice, it's not the market. You understand that this kind of stocks are very volatile, so why you trade them? Trade other stocks, maybe financials or insurance or banks or other stuff. You can see the chart, okay? It's very easy. You see the chart, the stock doesn't go nowhere and the sector go nowhere. You understand that these kind of stocks are not that risky as those that we are speaking about today, okay? Now, what is the future of Twitter? As I told you before, no one knows. No one knows, because everything in the market is a secret. You will never know. If you want to trade, you have a conviction, you have an opinion, just do it. Okay? Other thing, some people, they try to use options. Okay? They say, okay, if I put a trade and I don't know if I can lose too much money, so why not to buy options, either calls or puts options. If you think that the stock is going up, you can buy one contract or two or three, depending on how much you, but understand that when you buy contracts, all this money that you put in the market, it can grow so fast, but it can go against you, and they can wipe out all these contracts. Okay, so don't put too much money in the options. Okay, options, when you put your money, it depends on the stock. If the stock goes up and you buy a call, you can have a good profit. But if it's against you, all this money could be wiped out. Okay, because let's say you are going up and you buy a call and there's a gap down, so you almost lose all your money. Now if you put all your money, this is the biggest thing you can do in options. When you put half of your money or all your money into options, okay, if you do it once and you make money, you think that next time you will make money, but if it is bad, all your money will be wiped out and you will lose a lot of money. That's why try always to think in terms of risk. Okay, you say I risk, let's say you risk $200, you buy contracts, whatever is the stock, okay? I'm not speaking about Twitter or Facebook or any. Let's say this stock is $10 or $20 or $15 or $7, and you want just to risk, let's say $200, buying calls or buying puts. As you might think, if you think the stock will go down, you buy puts. Now, the good thing about options, you only lose what you put, and this is a good thing. Now, why? Because whatever the stock go down, you only lose this 200 that you put. You don't lose 300, or the broker asks you to put more money. No. And this is the good thing. Sometimes you put 200 and we have a gap up and you will make another 100 or 200 and you double your money. Sometimes it happens like this. And you make money from it. So the good thing is that even if you lose your money, you understand that you lose only the money that you put in puts or calls. This is a good thing about options. You don't lose more. But in stock, you can lose a lot of money. You buy a stock with $5,000, okay? You lose, let's say, 10%, so you lose 500. Although you don't want to lose 500, you want to lose only 100 or 200, but understand that you can't, okay? Because the stop loss doesn't work. Out of the what we call the extended hours, before the market opens or after the market opens. Okay, so it's up to you to see risk. If you want, for example, let's say Twitter or other stocks or smaller stocks, because Twitter now it is small, it's only $16.88. If you want just to try with what we call calls and puts, and you just buy one contract or two or three, you don't buy too much, and you put it at risk. This is something that you can opt, and not to put 5,000 or 10,000 in it, and then you get a big loss. Okay. For those who are new to options, you can see my training level 14. Understand options, calls and puts, and you just have a basic understanding of how it works. And for those who have never seen options. Now, as I told you before, for those who don't like risk, stay away from stocks that have gap ups and gap downs. Now you tell me, oh, how can I know? Okay, it's very easy. You just go to the chart, try to check 1 year or 2 years, and check if there is a gap up or gap down. If the stock is making a lot of gap ups and gap downs, what does it mean? It means this stock responds very well to news. Any kind of news, the stock is affected, either good or bad. I know you like when you buy a stock and you have a gap up and you make too much money. I know you like it, but understand that there is a risk also that the stock will be against you and you have a gap down and you lose money. Okay, and this is the market. Okay, you should accept whatever it comes with, because you can't, especially gap up or gap down, you can't change it or you can't exit on time, because these things happen in 1 minute or two. Let's say the news comes today, it's a good news. The stock is $16.88. It can go to 20 or 30 or 40 in 1 day. It's just because the news are always quick, and because the people who follow news are very strong people and they follow these things. Okay, they follow these things because they are day traders. Now for us, we are swing traders. That's why we don't follow that much the news and the other stuff. We like longer time, that we need time. Okay, so thank you very much for watching these videos. If you have any questions, please ask. If you want private message, please, here is my email in the description, top of the description, and my website. Just send me a private email, and thank you very much.